We already went through some of the basic foundational knowledge. I showed you how to open up a trading account, a demo account, so you could start trading. But now you're looking at the charts and you don't know what you're looking at. You're looking at these candles, you don't know what they mean. That's what we're going to get into now. I'm going to help you learn how to read price charts like a pro. So that's section 3 right now. Let's get into it. So first, you need to learn how to read a Japanese candlesticks. Like that's what we're looking at, Japanese candlesticks. You're going to learn how to read it. Now, I don't go around, and most people don't go around just saying Japanese candlesticks. We just say candlesticks or candles. You can just say candles. Keep it short. So what are the parts of a candlestick? When you learn how to read just the basic, like candlestick, everything else that we're going to talk about is building on top of that knowledge, is building on that. So what are the parts of a candlestick? You have the high of the chosen time frame, and don't worry, I will explain it. The high of the chosen time frame, the low of the chosen time frame, and the close of the chosen time frame. I did this on purpose. I put it 3 times on purpose because that repetition is going to help us remember and understand what we're looking at. So we're going to see the image on the next slideshow. So a green candle is a bullish candle. This means that buyers won. And a red candle is a bearish candle. Sellers won. So the open on a bullish candle, the open, it's here. It's at the bottom. That's the open. The lowest price that this time frame, that the candle in this time frame went, like if it was a 5-minute candle, in 5 minutes, the lowest that the price went was all the way here to the low. You see where I'm moving that mouse? That's the lowest price. Let's say that this was $20. That's the lowest. It opened, let's say, at $22, went all the way down to 20, from 22 to 20, but it went up all the way up to, let's just say, 40. It went all the way up to 40, but it just pulled back. And let's just say it played around here. It doesn't matter. It played around, but at the end, it closed here. Let's say at 30. Let's just say it closed at 30. This candle, during that time, during those 5 minutes, the buyers won. And once the candle closes, that's when you get the color. Like, yes, you will see the color when the market is above the open, but it's not finalized until that candle closes. So that's a bullish candle. The open is always at the bottom. When you look at a red candle, it's the opposite. The open is at the top. The market opened at a higher price and it closed at a lower price. The value dropped during that time. During this 5 minutes, the market went down and it closed lower. Let's just say it opened at $30 and it closed at 20. It lost $10. The bears won. It's a bearish candle, and during that time, the highest it went to might have been the $40. The lowest it went to might have been $10, right? But that's the anatomy of a candlestick. So these lines like this, we call them wicks. They're called wicks. They're called shadows. I just always call them wicks. This is a wick right here, a wick. You see that? This is the upper wicks. The upper wicks obviously is on the top of the candle. Upper wick and lower wicks at the bottom. This is the low, high, high. Now, before we go to the next lecture, I'm going to actually show you in the market. Let's look at the market real quick, and then we continue. So literally, I don't care what market you're looking at. You could be looking at crypto. Let's go to crypto. The candles mean the same thing. Look at this one. Look at right now. This one has 5 minutes left. I'm looking at 5 minutes. So each candle here represents 5 minutes. In 5 minutes here, the price went from 108.8639. It went all the way down. Yes, the lowest during that time was about, that's 107.967, but it closed here at 107.995. That's where it closed. So the bears won. The bears won on this one. Right now, the bears are pushing down. Now, there is less liquidity in the market, so the market is not moving as much. But right now, if the buyers push up a little bit, if they come in, you see that? It's forming a wick right there. It's forming a wick. And if it was too close there, then yes, like you're gonna see that wick. But if it keeps going and it doesn't pull back, you're not gonna see a wick. You see, like here, the price never went up, so you don't see a wick. What I want you to do is practice, like go through the charts, look at a current candle throughout the week, because throughout the week, you're going to see the movement. You're going to see the movement. You're going to understand them. You see it's pushing down, so you don't see a wick because it's going lower, lower. You see that it's going lower, so you don't see the wick. So this week, I want you to look at the candles, look at the current time, so that you get a feel for how candles move. But also, I want you to look at other candles and be able to tell what was the lowest price here. The lowest price here was about 107.779. Highest price, the open. The open was the highest price. Okay, let me get rid of that. Just practice that. Practice, like, please don't rush the process. Please understand what each candle did. So you could practice this. Okay, open, close, high, and the lowest was just the open. You see, so the open was here at the top, open, and the close. Open, close, high. So this here was the close. So open, close, high. Let's look at a candle that has wicks on both ends. And I want it to be more pronounced. That's why, like, I'm looking through it, because I do want it to be more pronounced. For some reason, you know what? If we look at something like YM, we're gonna see it probably better. Okay, so here, for example, this candle right here. This was the open. This was the close, the high, and the low. Practice that. That's gonna be your homework, to practice that. Practice that. Again, open, close, high, low. This red one, open, close, high, and the low. Practice that. I don't care if it takes you 2-3 days to, like, be comfortable with that. As long as you're doing that, everything else will make sense. If you don't learn that part, please don't move on to the next lessons. Don't move on to the next lectures until you understand that, because otherwise you will get confused. So again, I'll show you this one more time. Reference this chart right here, this image. Open, close for a bullish, high, and the low. Always, the high and the low are always in the same spot. So you just need to know the open and the close. The open on a bearish candle is always at the top. Just learn that. And once you do that, I'll see you in the next lecture.